Hey, how's it going, guys? Welcome back to mentfx, and very quickly before we jump into this video, Mentfunding has just went live on the 2 million evaluation program. Again, this is not for people that are just finding themselves trading, just getting their feet wet. This is for people that are already profitable, are already killing it, and just want to upgrade that and maybe take the liability off their own hands and come and trade for a firm. And if you're someone that's able to do it, that's great. Otherwise, here's a little snippet of a video that will be coming out very soon for you guys in its entirety, where I show you how to refine zones and how we think about zones. So without further ado, enjoy it. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Right? But what I was looking at that moment was this break of structure lower. And now it becomes very easy to refine your supply and demand zones, right? You have this supply zone right here, right? And at that supply zone, what do we have? This inefficiency that exists. So let's just play this back to here so you guys can see it. The inefficiency that exists from there to that low. So once again, we have a validated supply zone. Now, if we follow the mitigation of the supply zone and think about it from a fractal nature and from that algorithmic perspective that we speak about in the previous videos between timeframes, then the way things are mitigated, we can tell that the mitigation of this last zone actually came from this last wick right here, right? So that's its own refinement of that zone. Right, so now what we've done is we've taken that zone and made it a lot smaller. Now that means that we might have price come up and absorb just portions of it, right? When it absorbs it, does that mean that you're invalidated? No, right? Part of absorbing that is tapping into that larger supply zone, but because of the way that we're able to think about supply and demand and able to teach it now, we are able to allow absorptions like that to happen as long as they don't invalidate our main structural points, which are still going to be all the way up here. And notice how it's important to recognize that, we're not just looking at fib retracements, right? A lot of people will teach you to look at fib retracements somewhere up here, right? Maybe look at this volume imbalance, maybe look at this up candle, right? None of that is valid to us. If we follow the mitigations, all of this has been mitigated. Nothing has been left to not be to be mitigated in the future. So if we follow that mitigation, sometimes you're going to see the valid supply or demand zone be at the 50%, at the 40%, at the 60%, 70%, 80%. It could be at all. It could be in all different areas of that fib. So that's why we don't use fib for anything like that. We only use fib to re-refine certain areas. For instance, you could re-refine this by doing something like this, right? And then have this area as your refined S&D zone. That's also a valid way to view and utilize the way of thinking about S&D. But the overall refinement came to this 6 hour right here. And after that, I re-stepped back down a time frame. So something I've spoken about a lot here, something that you guys should write down and remember, is that we don't need to use volume, the DOM, other order flow confirmations, other forms of non-candlestick related patterns. We don't need to use anything that shows us liquidity, right? Because we can see it in the charts and the timeframes allow us to see that exact thing, right? With timeframes and being able to switch between timeframes, we can see what specifically happened in a given area, above a certain high, above or below a certain structural point, how a structure was created and how that structure may be delivered in the future, just by using the idea of multi-timeframe analysis and allowing that volume to act as the actual candle mitigation, right? So if we jump to a 4 hour now, what we can do is re-refine the zone. And this is where that zone came from. Notice that's that 6 hour zone. And that is a valid zone, even though it's not valid on this 4 hour. This is something that's really important. A valid zone on a higher time frame is still valid, even if you can't see it on a lower time frame, because time frames don't act as validations. Time frames act as proof of what occurred during a specific moment in specific time. And as a result, we can see what needs to happen before a given move can continue or finish. And that is why I teach you guys to think fractally and think across timeframes without having to stick to just one time frame, right? Because that doesn't really exist in the smart money sphere if you're actually operating and trying to learn it the proper way. So what I did at this point is I liked this wick. And remember what I say, a wick is its own supply and demand zone. So what I did is I refined this zone to right here and sent that out as the continuation bias for the overall, as you can see, 3-box strategy. And at that point, the only thing we were looking for is this right here, to continue and run the next liquidity low, being this low right here, which is now part of that structural run, and then to potentially continue going short if it wants to go short, right? We don't know about that. We don't know if it's going to happen. We don't know if it's going to run here and then come up and then go short. It doesn't matter. What matters is the immediate price action, the immediate structural ranges that are being created, and as well as all those, the multi-time frame approach to understanding the specific volume that happened within the candles to understand where that mitigation is going to take place most likely. So if I go back to my Discord right now, right, you can see that was that POI. And then let's make this bigger. That was that POI. And then if we see, I then went to this 4 hour, as you can see, Euro USD 4 hour, live chart, all good, looking for that specific run up into here and continuation down. Now, what's interesting is during this, and you can see I basically said, look at the webinar, it's right there, right? So I did this in the webinar too for the previous zone. So we've been 3 for 3, I think, this week on just EU, and we do over like 100 markets. So if we go down and take a look right here, oh, that's UJ. Okay, don't worry about UJ. Let's continue down to the EU. It's UJ as well, UJ. Hopefully I can find this on EU. Oh, so here we go. So, right, so you can see EU begins to go short, right? As you can see, price comes and taps it perfectly. So let's play it out to them, because now that we've seen it, it's all good, right? Price taps in. I'm not going to break down the specific, and here's FOMC, by the way, or whatever the news was. What was it? EIA. Okay, I don't even know what they were. But again, this is great proof, and I've made a video on news telling you guys that news isn't really anything important. News is nothing more than a catalyst for what's gonna happen, right? This move was gonna happen whether the news was good or bad. This is how liquidity works and how smart money looks to get involved, and they show you their hands way before anything happens. Similarly, when you confirm a certain area on the chart and you use that weak to strong hand transfer, right, and you see that breakdown or displacement in price, they're showing their hand because it's all they can do. They literally cannot do anything else but show their hand just before the real shit goes down. And that's where the best smart money traders are able to position themselves before the large fall off. Now, what's interesting though concerning this is you'll see that right before we had a rather interesting run up, right? So if we go back here and go to like a 15-minute, right? Right before that drop off, we had an interesting little run up and break of structure on a lower time frame. And notice what we did during that time. Let me go down a little bit more. Nice move to watch. Hedges for in our higher time frame EU delivery. So right here, as you can see, I sent this out right here on the 5-minute. We're looking at this structure break, this supply and demand zone right here. And basically at this point, I sent out this saying we should expect this. And again, you can see the live price, the date, whatever, all that is there. I mean, I don't care if you believe me or not. I don't show track records or anything like that, so it's not even important. You have nothing to flex here. You can go and see this yourself. All the time is respected and seen in the Discord itself. And if you want to be part of it, the description link, all is there. But what we do is we tap into this, and I basically sent this out, said we should see this high get cleared. And notice how interesting this is. This high, as part of this structural move, set up with all these highs here, right? So again, this idea of equal highs or needing to target equal highs is once again taken into account by the way we look to view price. And what I did is I sent this out and said, yep, even though we're bearish from that 1 hour refined zone, and notice how important it is to understand these zone refinements, right? This zone, or 4 hour, this zone doesn't look like a zone on this time frame, but that's not important, right? We need to recognize that the zones we use on a given time frame are valid and valid until they're either completion on the bottom side or invalidation on the top side, because that creates a specific time, a specific moment in price where we see this inefficiency exist and know what has to happen at that inefficiency if we are to see those continuations. And we've seen this happen 3 weeks in a row now with the webinars. For anyone that's a new member, I'm sure they'd love to talk about it in the comments right now on YouTube. Actually, feel free to drop it if you've been a member in the private mentorship. Tell everyone what it's like to, see me do the outlook 3 weeks ago, 2 weeks ago, 1 week ago on over 20, 30 pairs, and all of them to play into this specific delivery and how many opportunities you have even when we were wrong about our delivery, right? So again, you can see that's the zone we were looking for that buy there, come to take out these highs and then continue short. Why is that we're looking for that? Is it because news is coming out? Is it because there's some crazy thing at hand? Is it because, we just know something someone else doesn't? No, it's because we're following a specific criteria, specific rule-based way of entering and looking at price. And we're following a specific way of refining and using supply and demand zones with the idea of inefficiency and mitigation in it. So it encompasses everything smart money does, shows you the footprints of everything they do, all in multi-time frame analysis of a candlestick chart, and it's all there. So we were looking for that take of the highs and continuation short, right? So as we scroll down, what do you guys see? Hey, how's it going, guys? Here I am in the editing program. I hope you guys enjoyed that little snippet right there. The entire video will be coming out very soon, where you'll be able to sit through everything that we speak about, including the portion before this video and the portion after this video, where we go even deeper and show you proof and actually show you an entire rundown of the outlook that we had in the private mentorship. So thank you so much for watching. Drop a comment and I'll see you all in the next video.